Sum number two is of cash budget. A garment trader is preparing cash forecast for first 3 months of calendar year 2021. His estimated sales for forecasted period are as below. January, February and March. So January, February, March forecasted sales is given. We will be preparing cash budget for January, February and March. The trader sells directly to public against cash payment and to other entities on credit. Credit sales are expected to be 4 times the value of direct sales to the public. He expects 15% customer to pay in the month in which credit sales are made, 25% to pay in next month and 85% to pay in next to next month. The outstanding balance is expected to be written off. The purchase of goods are made in the month prior to the sales and it amounts to the 90% of the sales and are made on credit. Payments of this occurs in the months after the purchase. No inventory of goods are held. Cash balance as on 1st January 2021 is 50,000. Opening balance will be required. Actual sales for last 2 months of the calendar year 2020 are as below. November and December sales is given, which will be also important for us. You are required to prepare a monthly cash budget for the 3 months January to March. So let us do it. We will be taking January, February, March cash budget. Opening balance of January will be available 50,000 rupees. What I will be doing? I will be adding receipts of only cash. I will be deducting payments. I will be getting closing. And closing balance of January will become opening balance of February and so on. We can complete our cash budget. Let us first go for receipts. The trader sells directly to the public against cash payment and to the other entities on credit. Credit sales are expected to be 4 times the value of direct sales to public. So let us first go for Jan. These are my total sales, 600. So what does it say? Credit sales are expected to be 4 times the value of direct sales to public. So if credit sales is 4x, then cash sales is X and total sales is 5x. If 5x is total sales, what will be X? 600 divided by 5, that is 120. Then what will be 4x? Will be 480. Right now we are interested in cash sales. For February, for March, same thing will happen. 600 and 800. So I have got cash sales of Jan, Feb and March. Cash sales are immediately realizable. These are cash figure, and if those are cash figure, I can directly write down into my cash budget 120, 120, 160. What I'll be writing is cash sales 120,000, 1,20,000, 1,60,000, because the figures are in thousand. Now the point will be of credit sales, and that will be relevant. Try to concentrate. He expects 15% customer to pay in the month in which the credit sales are made, 25% to pay in the next month, and 58% to pay in next to next month. So let us start from November, because the total sales are given from November. and I am writing down total sales. 640, 880. In the same way, I will be finding out cash sales and credit sales. I am right now interested in credit sales. The same method will be used. 640 divided by 5 multiplied by 4. 512 will be credit sales, and 880 divided by 5 multiplied by 4 is 704. And we know credit sales of Jan is 480 and 640. So we have got answer of credit sales. Now what happens, understand, we are talking about this 512. The question says that 15% is expected to be paid in same month. So 15% in same month. 25% to be paid in next month. 25% in next month. And 58% in next month. So what will happen? I should have written it over here. 15, 25, 58. 15, 25%, 58%. So what happens with this 512? Try to concentrate. Out of this 512, out of this 512, 15%, 76.8 thousand rupees, that is 76,800 rupees, will be recovered in same month. This is what I am writing when it will be recovered or when the debtors will be collected. Out of 512, 25% will be recovered in next month, that is 128. And out of 512, 58% will be recovered in next month, that is 296.96. Now you will tell me, sir, totally what you have recovered is a 296.96 plus 128 plus 76.8, which is 501.76. What about remaining 18-19 rupees? That will be bad debt. Sir, will we not have to record this? The answer is no, because right now we are preparing cash budget. We are not interested in finding out profits. We are just interested in finding out what will be cash generated. And cash will be generated in this manner. 76.8 will be in November itself. 128 will be in December and 296.96 will be in January. Let's take off Jan. About this 704. 704 into 15%. 704 into 15% is 105.6. 704 into 25% will be 176. 704 into 58%. 408.32. This is when this money will be recovered of 704. Let us now take 480. Out of 480, 15% will be recovered in same month. 72. Out of 480, 25% will be recovered in next to next month. 120. Sorry, next month. And 480, 58% will be next to next month, 278.4. This 480 also I can directly write it down. 72 will be recovered in same month, 120 will be recovered in next month, and 408.32 will be recovered in April. April we are not preparing cash budget, so this figure will not be relevant for us. And last one, the 640. We are interested only in March, so we will not be considering what is recovered in April and May. 640 into 15%. 96 will be recovered in the month. Now see, I'm not even seeing what is recovered in December. I'm interested only in Jan, Feb and March. So what will be recovered in January? This of the sales of November, this of the sales of December, this of the sales of January, and we will be getting answer of what is recovered in January. 296.96 plus 176 plus 72, that is 544.96. This will be 408.32 plus 120 plus 72, 600.32. And those all figures are in thousands. 278.4 plus 120 plus 96, 494.4. This will be, let us fit in the numbers, 5,44,960, which is collection of credit sales, right? This is 5,44,960 because the rupees are in thousands. In Feb it is 6,320. And in March 4,94,400. So we are through with this point. Purchase of goods are made in the month prior to sales, and it amounts to 90% of the sales and are made on credit. Payment of this occurs in the month after the purchase. No inventory of goods are had. So let me explain you by taking one figure, which is January total sales is 600. This is 6 lakhs, right? They say if you want to sell 6 lakhs rupees goods in the month of January, the purchase of raw material for the same will be made in December. So purchase will be made in December. How much? 90% of 6 lakhs, which is 5,40,000 rupees will be purchased, and that purchase will be made in December. But this purchase will be credit purchase, for which the payment will be again done in next month, which will be January. So what we can directly do is a 90% of January sales will be cash payment to creditors in January. This will be cash payment to creditors, which will be 5,40,000. Similarly, for February also 5,40,000, because of Feb sales is also 6 lakhs. 90% of 6 lakhs will be 5,40,000. 40,000. For March, 8 lakhs into 90%, 7 lakh 20,000. So 540, 540, 720 will be payment to creditors. Five lakh 40,000, 5 lakh 40,000, 7 lakh. This we have already taken, this we have taken into consideration. We can directly prepare cash budget. Now it is just calculation which we need to make. $50,000 plus 1,20,000 plus 5,44,960 minus 5,40,000, which will be 174,960. Will be closing balance 174,960 will be opening balance 174,960 plus 1,20,000 plus 6,320 minus 5,40,000, which will be 3,55,280. 3,55,280 plus 1,60,000 plus 494,400 minus 7,20,000, 2,89,680. Those are closing balance.